Good evening. I'm Peter Resnicek from ShadowTrader.net, and this is another edition of the ShadowTrader Video Weekly. S&P, we talked about some key levels last week, namely the 61.8 fib retracement from all-time high to December low, and also the 200-period moving average. Both of those were tested again this week, but they didn't bring in any serious sellers. We're going to talk about the details of that. Market profile, some really cool nuances appearing in the profile distributions that I want to go over with you. VIX update. Last week we talked about the VIX and a key level, what happened this week. And last but not least, I'm going to leave you with some really good trade ideas. I got 6 of them for you, so I hope you enjoy. All right, let's get into it. So starting with this SPX chart, as I was saying in the intro, we had a couple of key levels tested this week, and they didn't bring in any serious sellers. I'm going to draw your attention to the circled area here on the chart, and specifically what I'm talking about in terms of key levels is I'm talking about the 61.8 retracement from the all-time high to the December low. And also, it's kind of in a very light blue, but if you can see it, this is the 200-period moving average on the daily of the SPX. And as I was saying, over the last 5 trading sessions, which was this particular week, we traded well above the 61.8 and actually closed a daily bar there. So that was relatively bullish. And then we had a couple days of balance, and then Thursday we fell down, and Friday we went back up a little bit. So basically the main takeaway that I just want everybody to notice here is that these 2 key levels did not bring in any stronger sellers at this point, even though by all intents and purposes they should have, right? Especially the 61.8. That's very, very important. I personally don't put that much stock into 200 MAs, but I know that some people do watch them. But if you really look at longer term charts, you'll see that 200 period moving averages really don't stop price. The moving average is so long that price actually goes through it. I think what's more important, to be honest with you, is this red line here, which is the 50 period moving average. Most institutions like to buy stocks that are above the 50. That's kind of a line in the sand for them. They like to be long stocks that can hold their 50, and a lot of times they'll get rid of stocks they can't hold the 50. So that's very important. And we actually traded through the 50 some time ago back here in January. We had a little bit of consolidation and then moved higher, and we've been well above the 50 ever since. Okay. Briefly looking at the other majors, we can see here that NDX came right to its 61.8, and that caused a little bit of a sell-off. But where did it sell off to? Right back down to the trend line, and on Friday right back up again. So we'll see if we retest that area. And last but not least, I want to talk a little bit about the Russell, which to me is the sort of ultimate risk-on index if you think about it. We had a trend line break in the Russell way back here, pretty strong, moved up quite a bit, and now this main trend line here, if you notice, it's all the way up here. We got quite a ways to go in terms of upward motion in the rut, and also to the 61.8. The 61.8 is actually still quite a ways away. The Russell actually resolved the 50% in the same way that the S&P resolved the 61.8, and now it looks like we have a bottoming tail here on Friday. It looks like it wants to push to here. So these 2 levels are probably going to be a confluence when they come together. It's going to be the main downtrend in the Russell is going to come together with the 61.8, and more than likely that's probably where the Russell wants to go. So I do think that's important because remember the Russell is more or less kind of a risk-on type of a barometer. These are the small-cap companies. They're a little bit riskier. They're mostly domestic. They don't have as much overseas influence. They're not really multinationals. And it's a good barometer for risk-on. All right, let's take a quick look at market profile, where I want to just talk about a few key nuances that are really important and stuff you need to look for next week. So I've marked off the 2-day balance area, which would be the Wednesday-Thursday range. You can think of this as kind of a big poor high. There's not a lot of excess here. So whatever this up auction was here that led us to it, not really any sort of meaningful excess high. There's just a couple ticks of excess on each of these. And if you put these 2 together, you could make the argument that you have a poor high that needs to be repaired. Okay, we do have a gap also to look for in the coming week. That's a very small one here, so pay attention to that. But mainly I want to draw your attention to what happened on Thursday and Friday, and especially the overnight inventory. So keep this in mind as you come into trading on this next week. This is overnight inventory that's 100% net short, and we say that because why? All of it is below the settlement. And then the next day, which would be Friday morning, correct? Once again, overnight inventory is 100% net short, correct? Because it is below the settlement, which is the red line here. So you have 2 back-to-back days of 100% net short overnight inventory. What does that do? That means that sellers are a little bit in trouble. They're getting kind of over their skis a bit. I like to use the phrase painting themselves into a corner, and they get a little bit stuck. And Friday's action really confirmed that, in that the market spent a lot of time trying to resolve this low here, which is a weak low. That's also a relatively bullish sign. Remember that poor highs and poor lows, I should say it's a poor low. I shouldn't use the term weak low. Weak low is actually something else. That's actually defines something very different in market profile. I'm not going to get into that currently, but it's a poor low. And poor lows at the outset, even though they need to be repaired, which would indicate the price wants to go in the direction of the poor low, it's actually the opposite at first, right? Prices want to move away from the poor low because it tells you that sellers, or buyers for that matter, have entered positions at poor location and they're kind of stuck down there, and they didn't get the capitulation of the breakthrough, the breakdown to get paid on those shorts. So you have some shorts here at bad location. You have to assume that a lot of these overnight shorts are bad location, right? You have 100% net short overnight inventory. And what happens on Friday? No big surprise. The market has very much difficulty getting below the prior day's low. And by the end of the day, where do we close? Up here, because all those shorts at bad location of 2 days back-to-back overnight inventory, it all comes home to roost. And sometimes it was actually interesting because, as an aside, I'll tell you, on Friday, I was helming the squawk box all day long because Brad Agunis was out sick. And we actually bought ES as we came back up into the ranges. We could see that we couldn't cross, and we made a nice quick $5 gain, which was nice. I actually had a first target right here at this prominent overnight POC, and we only went about 2 ticks over that. So it was really a pretty solid trade. All right. So these concepts really do work. As I always say, if it's, I really think it's worth your while, check out my blog. Every morning I always write this up well in advance of the different levels and everything. It only costs you $1 a day. And I do think it is very worth it. All right, so that is our profile situation. Let's get into the VIX. If you recall last week, this is kind of an update from what I told you last week. If you recall, in last week's video, I said, watch the 16 handle in the VIX. We don't want to lose that. If we do, that means that volatility is just going to dribble lower. If you're a long-term equities player, this is a good thing for you. You do want to see that because it means that the market is probably going to slowly grind to the upside. Well, we did get the loss of the 16 level in the VIX. Here's the support point, and there it is. And we had these 5 days of action here. We went all the way down into the mid-15s. A little bit of a bounce here on Thursday on that pullback, and look what happened on Friday. Volatility slamming back down. So this is overall a relatively bullish signal. As long as we continue to see this sort of dribble lower, that is a bullish signal. Okay, let's get into a few trade ideas. Friday, I had the honor of writing the looking ahead section for the ShadowTrader swing trader. Dano had some pressing personal business he had to take care of, so he asked me, could you write the looking ahead? And so generally the looking ahead basically looks ahead and gives a trade setup or talks about something specific in the market, like Dano's money flow, things like that. And in this, so for Friday, I decided to do a stock pick, and I chose ULTA. And I think this just looks phenomenal. I want to give it out to you guys as well. This is a very tight consolidation of about 13.5 points. And we know that we have a prior high here all the way at 1320. Very highly rated from Investors Business Daily. I think it's number 17 on the current IBD 50. And I was watching on Friday afternoon, there was a lot of relative strength as this action just kept powering the stock higher off the lows, but more importantly, up here in the last, say, 2 hours of the day, I was watching ULTA do that, while the SPY, during the same time period, really just kind of chopped around. Obviously, the SPY exploded in the last 15-minute bar, but during all this period, when it was going sideways, notice that ULTA was just continuing to be bought up, right? During that whole time period, ULTA was looking like this. So I like that setup. We're very close to the breakout point in the stock. When I say the breakout point, I mean obviously to clear this high, which is 296.56. Friday went as high as 296.48, so just missed it by just a few cents, and looking like it wants to break there. And again, we should be looking at a minimum of a first target of double this range. And again, I see this range of about $13 to $14, so just draw the same box right on top of the same height, takes you to about 310. Okay. Next item up for bids, as they say on The Price is Right, is Snap. This company has been beleaguered for quite a while. It's kind of hated by investors, loved by teenagers. But look, Huge downtrend broken. Look at the volume here. Big volume here on their earnings. They seem to have righted their ship in some way, or at least traders want to be covering their shorts. The reason I like this is just basically because I think everybody's short. I think this is a very heavily shorted stock. If you look at the monthly, it hasn't been trading that long, but it's just been nothing but down. So I think there's probably a lot of shorts stuck in here. And if you look at that explosion to the upside, they're probably going to be covering. I think the stock could go up to about 10.50, I believe, and I'll show you why on the weekly. Very simply, I think it's this prior low that is the resistance. That's the 10.50. It's also the weekly 50 MA, so look for that there. Okay, next, Electronic Arts. Do you have kids who play Fortnite? Many of you probably do. Maybe some of you play Fortnite yourselves. Apparently, there's a new game in town, and I can't quite remember the name of it. I apologize. I think it's called Apex something. I might have that wrong, but there was some news out on EA that when the game was released, in the first 72 hours, they had 10 million players. This is a new game that EA has out, and that was more engagement than Fortnite, right? Got in the same time period, I guess. And look what happened with the stock. Gap down on earnings, and then massive volume move up on volume. Huge move on Friday. I'm just thinking of the whole number here. I mean, it's just pretty obvious that traders are going to be holding to 100. So there'll be a day trade there on Monday. I'm actually short the 199 put spreads that expire next week. Sold them for about 66 cents and looking for the stock to move up over 100, and then those put spreads will collapse. All right. Let's keep it going here with the ideas. MA, nice consolidation with still some room to maneuver to the prior high, which is up at 225. Stock closed somewhere here in the 2 teens, just over 215. So I think there's some room to move there to the upside. And last but not least, I'll leave you with Square, which is SQ, Sierra, Quebec. And just very simply, a nice bull flag pullback off this move up. Looking pretty good. Looking to crack that. Could take it to the prior high here or a little bit higher. Notice that there is resistance here, even higher up, closer to the 85 area. All right, that's all for this week. Thank you again for joining me. As an advance heads up, next week I will be out of town on Thursday and Friday, so I'm not sure if there will be a ShadowTrader video weekly next week, or I may have one of my colleagues handle it for you. Also, those of you that subscribe to my blog, I'll be posting the market profile distribution images just as a courtesy on Thursday, Friday, but I will not be writing any commentary. All right. On behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, I wish you good trading and good night.